I think overall it is positive. First of all, there are no negative surprises. The market was afraid about some capital gains tax or some other form of tax being imposed. So we didn't see any of those negatives. And they kept to the promise of the 3.5% deficit target.
Was that a surprise?
No, I think it looked like they were going to keep to that. Because I think it's important to get rates down.
Do you think that a revenue growth projection of 14% growth for FY17 is a bit ambitious, given how they undershot on tax revenues this year?
Right. So I think key is going to be what is the nominal GDP growth going to be. So
they're projecting 11%.
Right. But if you look at last year, the nominal GDP growth was very similar to the real GDP growth. So while the CPI inflation was 5%, and the GDP deflator was near zero. So we don't know what it is going to be there. If the GDP deflator is going to be lower, then I think it is possible, even after achieving about 7% real GDP growth, they could undershoot on nominal GDP growth.
Rate cuts, that's the next thing which is on everybody's mind. Given the fact that the equity markets are rejoicing, there's a bit of a relief rally in the equity markets, a bit of a relief rally in the bond markets, the yields have come off. What are you expecting in terms of more rate cuts in addition to the 125 we've seen thus far?
So it's a function of how soon the inflation comes under control. I think Rajan has made it very clear that he's going to be data dependent. He wants to see the inflation come to much lower levels. If we see that happening, I think there can be substantial rate cuts. If we don't see that happening, then I think the rate cuts can be a little lower.
But what is your expectations on the rate cycle? When you're saying substantial rate cuts, more than 50?
Yes, I think more than 50 is a possibility if inflation comes under control very fast. And Rajan has confidence that the government is going to stick to the actual deficit will be close to what they are projecting.
How much do you think would suffice? I mean, if you're saying more than 50, are you saying 75 basis points or even 100 over the course of the next 12 months?
I think it's not ruled out. I wouldn't say it's the base case that we'll have a 100 basis point cut. But if the global situation continues to be deflationary, commodity prices continue to be pretty low, the government is sticking to the deficit targets. We don't see any big spike in food inflation. Then it's a possibility.
So first quarter of FY17, you think can show signs of a pickup?
Anytime now, I think we should start seeing a pickup.
But you think the worst is behind in terms of the earnings cycle?
From purely domestic factors point of view, I think so. But of course, the global issues are very difficult to predict, especially China. I think there's a lot of challenges that they are facing from a short-term point of view. So how all those things will play out in terms of global demand, global sentiment, is difficult to predict.
The markets are so depressed right now. At 14 times one-year forward earnings, perhaps people would say that, there was some little more downside to the market from here, but largely coming into the buy zone historically, that the market, calls for investors to put in capital at these levels. Where do you see the investment ideas, investment themes? Because from the start of the year, it's been a rough patch, which has thrown opportunities for investors such as yourself, who are long-term investors, to buy into sectors, where there could be growth certainty at reasonable valuations. And which are those names that you would be looking at, particularly if anything comes out or stands out as an opportunity from this budget?
Our top picks have not changed very materially over the last 1 year or even 2 years. So we like good quality banks because the savings will grow faster than the economic growth, because the savings rate will increase over a period of time. And financial savings is still a small portion of the total savings, and it will increase. And so we think good quality banks can grow at 18 to 20%, and also maintain very good levels of profitability. So we have a lot of ideas there. In consumer discretionary, we see a lot of opportunity. In quality industrials, again, with all the trust on infrastructure and building the India and creating manufacturing capacity, there are a lot of opportunities. So we see opportunities across multiple areas. We are by and large bottom-up stock pickers.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.